Hello, welcome to my channel. Like and subscribe and all that other stuff that takes up the first minute of YouTube videos. Right, so first of all, let's suss out if you've clicked on the right video. Now this video is for those of you who are trying to start to do the right thing by putting some money aside. You have no illusions of becoming a multi-millionaire within 5 years, but you realize that your current lifestyle will never afford you a home to call your own. If this is you, congratulations on taking the first step and not living paycheck to paycheck. I'll start off by pointing out some good things to do, and then I'll point out some mistakes that many investors make. The best thing to do first is to wipe your debts away. This is especially true for debts where the interest rate is higher than 10%. Whether it be a car loan or a credit card loan, it is essential that you get rid of them. There is no harm in buying shares or cryptocurrency before removing these debts, but it is not the most efficient way to grow your wealth. The most efficient way is actually to clear those debts away first. However, with that being said, seeing the free money come in from your investments will give you motivation to stay on track and get your finances in order. But if you're taking the psychology out of it, the maths state that you're better off clearing your high interest debts before starting investing. Now the first investment which I can recommend for anyone is to buy an index ETF. Even if you prefer real estate as an investment, purchasing shares whilst you're saving up for your first house will help you in hitting that moving target, which is housing affordability. Shares grow at a slightly higher rate than real estate, and when shares have a major fall in value, real estate generally does fall as well. In order to buy shares, Google NAB Trade or ComSec. NAB Trade has $15 brokerage and ComSec has $20 brokerage. If you're thinking about another broker, just make sure they're not using the word CFD in their services. I'll explain more about what that is in another video. Once you've started an account, go to Buy. And here, you can pick from 3 good choices. If you want to invest in the average Australian market, the 3-letter code that you need to type in is VAS. This averages 7.57% growth per year. If you want to invest in the average of the US market, the 3-letter code that you need is VTS. This averages a whopping 16.61% growth per year. And if you want to invest in an average of the entire world, the 3-letter code that you need is VGS, which is 70% US, 20% Europe, and 10% Asia. And this averages a 12.4% growth per year. Now all 3 are good choices for starting your investment portfolio. Another method to adopt is dollar cost averaging. This is a strategy where instead of spending $10,000 in a single day, you can spread out $2,000 purchases every 2 months. As you may have seen, the share market can be a little bit volatile, so this is a good way to prevent you from buying in the most expensive day of the year. Now I will warn you about something that will frustrate you. These funds grow by an average of 10% per year. This is incredibly slow, and when you consider that a $1,000 investment will only grow by $100, that is tiny. This is especially harder when you have friends who have invested in some experimental crypto and they've doubled the money in a week. But the share market is a tried and tested approach, or at least the market index part of it is anyway. For investing in crypto, I have no issue with that, so long as you're putting between 1 to 10% of your available money into it. Do not go all in with crypto. The problem with going hard in crypto is that you can easily cost you money, and if this happens to a new investor, it'll turn you away from investing. I know that you're saying that it's a waiting game and you know that you have to wait out the losses, but this is much easier said than done. When you invest money and it loses its value, the first time it happens it is really painful. It'll be an emotional roller coaster, so it is much better to ride the roller coaster of small losses the first time it happens. The COVID crash lasted only a few months and the GFC lasted 2 years before both losing 50% and then recovering. When Bitcoin crashed in 2017, it lost 2/3 of its value and it stayed down for 4 years. Yes, it did go up again, but very few investors would have had the temperament to stay with it for 4 years. Now the COVID crash was the first crash where I had significant funds exposed. During the low point of the COVID crash, I remember feeling nervous as hell, and I can imagine the stress that more aggressive investors would have been feeling. I still felt this way even after weathering the 2015 and 2018 mini crashes. It's one thing to read that the market will always return to its original value, but it's an entirely different thing to experience it. So just to summarize everything, when you start, go to ComSec or NAB Trade and buy into either VAS, VTS or VGS and start with small amounts and average out your purchases over the first year. So, stay tuned in my next video when I tell you about how not to buy shares. Anyway, thanks for watching, like and subscribe and all that other stuff. Thanks, bye.